Welcome and good morning, everyone in the room. Today is Tuesday, October 4th, and I'm Michael Boutros, currency strategist. Good to be with you guys here for this live intraday strategy webinar on SB Trade Desk. Eileen, Conwall, Graham, Dan, Pooja, Pete, we got a full house today. So, start of a new month, start of a new quarter, and we're getting some radical price action to begin with already. Looks like Eileen's picking up on this. Good morning, Michael. Good to see you again. What a wily market. All hands want to chase like crazy. I completely agree. The topside break or the push that we're seeing into key resistance here for the dollar across the majors is definitely something we're paying attention to. Remember, we've been watching this consolidation. We'll go over the Dow Jones FXCM dollar index as well as the DXY just to give you a quick pulse on where that is. Conwall says, hello and good morning, Michael. Sir, great to see you, Conwall. Michael, I'm short silver. Please, your short bias and your advice around 119. What is it? You're at 1911? Okay, we'll definitely take a look at silver. And West, gold was definitely on the table as well for Conwall. All right. I just want to get through the dollar majors real quick, kind of give you a quick prep of where we are to start off the month. You know, we ended the month with some pretty interesting price action. A lot of these levels coming in, or a lot of these pairs coming at some critical points. So we'll go over Aussie dollar with the on the back of the RBA last night. You didn't really get much. The RBA was pretty much wait and see approach, still remains unchanged, so we'll go over that. Sterling we'll talk about, pushed lower through the post-Brexit lows. That's also something that we're watching very closely. Euro, we'll touch on the Kiwi in the end. Listen, out of the pairs that we've been starting since the start of the month, i.e. Sunday, it's pretty much just Kiwi in the end, are the only things that I've been messing with and the only things that have been working rather well. So we'll take a look at both those pairs as well. All right, as always, any questions or trade setups or specifics on anything we go through as I go, feel free to interrupt me and just give me a quick note. So before we get started, here's what the Dow Jones FXCM dollar index looks like. We'll take a look at the ICE dollar index in just a moment. We are coming into that critical resistance zone that we've been talking about for months and months. This is the 618 retracement from the decline off of the high that you made in July. This is an exact 100% extension from the initial leg up. That gives you 12,014, 12,018, a region that we're testing as resistance right now. If we break through this, and specifically on a closed basis, note that momentum on the daily chart is all, sorry about that. Momentum on the daily chart is also coming into an area of resistance right here at 60. So it's make or break here for the dollar, and it's early in the month. We're just setting the October opening range, something to be very mindful of, okay? So I'll be watching this with great interest. I have it at near-term support. Momentum is an overbought condition, so this is not the time to try to sell this just yet. If we get back below 70, that might be a near-term short trigger, but as it stands, you're pretty strong here on a push into the U.S. Open right at resistance. Now, I haven't put the marker for the new month yet because I don't want to get this all cluttered up, but here's obviously your monthly open, okay, which is just above the 100-day moving average. It's where the monthly open is. So that's the level to beat, okay, right here, as far as just playing this as an objective weekly opening range break to the downside. As it stands, we're at resistance. If it breaks higher from here, you know, the whole short idea for the dollar index, immediately I'll put that on hold, okay? There's really nothing on tap until you get into the 711 high. That's right around 12,046. And then 12,061 is going to be a basic 786 of the entire decline. All right, so looking with great interest, we're at resistance right now to head into the U.S. Open. Now, if we look at the relative performance of the greenback heading into the U.S. Open, you can see that it's stronger against all its major counterparts. Like I said, Kiwi and Yen are the only two long dollar plays that we've favored since Sunday. Swissy is kind of a one-off here, but really Aussie taking a hammering down 0.73%. Like I said, on average, on whole, still didn't get too impressed with what we saw yesterday. So let's jump in really quick into the ICE dollar index, and then we'll hit that Aussie. So this is the Dow Jones FXCM dollar index. At its inception, Euro, Aussie, Sterling, and Yen, right? Here's what the DXY is. A basket of 6 currencies, still much more heavily weighted the Euro. But that consolidation that we talked about heading into the close of the month, here's the topside break, now checking last month's high. Last ditch effort, a 96.33. Same exact deal with this, okay? If we close above this region, you're looking for a rally right into basic trendline resistance or slope resistance off the highs from last year, backed by the 618 retracement. That's 97.23. If momentum fails to hold 60 on a close, and if we close below this, the immediate risk is for a little bit of a push to the downside again. Near-term support right back at last month's open, the 200-day moving average, right around 95.93. So as far as the dollar index is concerned, both the ICE dollar index and the Dow Jones dollar index open up the session today right underneath resistance, and we'll really have to see how the session sort of progresses. What happened with the Swissy on Friday, says Eileen, on a futures chart, looks like it was reset to parity over 15 minutes and then back to where it was hovering before. Honestly, Eileen, I have no clue. But those end of quarter, end of month, end of week flows is why I kind of prompted everyone to take a seat on Friday heading to the close of the month, because you get those kinds of rebalancing. But I really don't have an exact answer for you from a fundy reason of why that happened. Questions on the dollar index, either dollar indices here before we move off to some of the majors. All right, let's jump into last night's update. So Aussie dollar, here's what we look like heading into the RBA. Here's what Aussie looks like right now. Okay, and just to put things in perspective before we get into the 30-minute chart, where we are trading right now. Okay, I'll bring your attention again to that long-dated trendline resistance dating back to the 2013 highs right here in red. Okay, we kind of tagged that perfectly last month, pulled off, or excuse me, back in August and pulled off again last month, right off that region, pulled off. Here we are now, a little bit messy, but there is another basic trendline resistance off that same high right here. Tagged in August, tagged in September, and again, almost tagged here towards the end of the month. That's the level to beat to really get the breakout while still considering 77.35, 77.56 as major key resistance. So the idea is to look for a pullback near term to get this thing going for a nice long scalp if we can. You're not really getting it. You did get a decent pullback. Here's where the RBA interest rate decision came out last night. You got a quick spike into the highs again. You actually did have a decent opportunity to get back on the short with a really tight risk to reward here, targeting the monthly open. But really, September high day close, the monthly or the weekly opening range low and the monthly opening range low for that matter, still at 76.40 here to the downside. So would like to see Aussie a little bit weaker here to start off the week. And we'll be looking to fade weakness near structural support here. Got a couple of median lines that have offered some really nice plays in Aussie over the last couple of days. Momentum, not really much of a tell here, although we did hold 40 in overnight, and that's, again, pretty encouraging. So we'll see. I'm not really interested, guys, to be quite frank with you, in trying to play the long side from these levels. Even if it does break the opening range high for the week, you still have that trend line and the August high day close to contend with. So not really interested in trying to play the long side here. I'm either going to wait for a pullback to get long at one of these downside levels, or if we break through, I'll wait for the zoom, retest, and then I'll try to play the long side again, targeting 77.56. But from here, yeah, I still think you need a more dramatic setback before we can get back on the long side. All right. Also keep in mind that the dollar index, specifically the Dow Jones dollar index, is at resistance. So if that holds and starts to pull back, you might not get the pullback that we're looking for. So like I said, even if that does happen, wait for the break, zoom and retest to get back in. So I was hoping to get a little bit more, snap and play around with the RBA. It didn't get it. The RBA interest rate decision wasn't really all that interesting. They held rates as expected. A few things to look at here. Here's the Credit Suisse overnight swaps, guys, as they pertain to interest rate outlooks from Credit Suisse across the majors. You can see that the Aussie dollar, the RBA, is still expected to cut about 20 basis points over the next 12 months. So something to keep in mind. Highlights from the RBA interest rate decision. The major highlight I kind of, took away was right here. Okay, they did cite that indicators point to continued jobs growth over the year, unchanged policies consistent with sustainable economic growth, and there was one more concern over inflation. Appreciating Aussie dollar could complicate economic adjustment, so there's a little safe haven there that they're throwing out as far as strength in the Aussie. But there was a comment here. They suggested inflation may, there it is, sees inflation remaining quite low for some time. And again, that's the same issue that we've been following here in the U.S. And trying to stoke inflation is one of the major chief components that all these central banks are trying to do. And a strengthening Aussie really counterbalances that. So as they keep monetary policy extremely accommodative, the strengthening Aussie only hampers their ability to stoke inflation. So we'll see if any more comments come out of this. Remember, this was Philip Lowe's first RBA interest rate decision, the new governor, and we'll continue to see whether he keeps this wait-and-see approach moving forward. But like you saw with the Credit Suisse overnight swaps, there's really no expectations in the immediate future that we'll see further easing. So with that being said, everyone who's calling for the Aussie weakness on account of further RBA easing, not necessarily the best play right now, right? So we're going to continue to let the technicals guide us. Again, you could see some exhaustions near term at this region. I'd be looking for a pullback, essentially try to get more on a long position. If we break the 76 handle, specifically Friday's low, okay, down here, that would suggest you got a little bit more of a dramatic downside play, and you could risk a drop as low as 75. So again, to start off the month, we'll stay a little nimble here. We'd look to stay constructive above 76. That's kind of the last line in the sand for me. Near term, to look to try to get back on the long side here for Aussie. Hey D, great to see you. Says sorry I'm late today. No worries. No worries. We have retail sales on tap tonight from the Australian market, so do keep that in mind. Here's what the economic docket looks like. Got a flat read last month, so you are expecting to see a nice little rebound there to the tune of 0.2% quarter. That's a month-on-month read. All right, excuse me, guys. I'm a little under the weather, so if my voice is not 100%, still getting over this weather change in New York. Gets me every year. Okay, so that's Aussie. We'll see if we can't get some play off the weekly opening range break here, but as it stands right now, don't have any open exposure on that. Sterling, I just want to touch base on real quick. Same type of deal yesterday. I just wanted to highlight with the pound. I didn't take either of these setups yesterday, but I just wanted to highlight that we were coming into some interesting support, and basically that 786 that you saw was almost the exact swing low that you made post-Brexit, and would have been a decent area to look for some initial support on this trade. We plowed right through, now testing this long-term slope support from 1985, okay? And we just tagged that for the first time this year with this decline here. This is another, 30-plus year fresh decline, fresh yearly daily close for a pound. So we don't want to play hero and try calling a low, but irrespective, you are coming into some slope support. I'm going to bring this out into a weekly chart just to show you a little bit more clarity the levels that we're coming off of. So basic slope resistance taken off the 92 and subsequent high that we made in 2007. You can see that slope extended off the low that we made for 2001, offered some really nice pivots. We broke this year, tested it as resistance, moved off. That same slope extending off the low from 1985 is being tested right now as support. Last ditch effort. Again, not necessarily something to say, okay, let's take a long position, but if you're holding short exposure, I'd be very mindful at this point for the sterling. So you're probably thinking to yourself, Mike, this is all good and dandy. So what's the play? Can we get a play off this or not? We may be able to if we see some reaction off this region. There is one other slope I just want to highlight. This slope here, basic trendline resistance, has continued to offer some really nice pivots, and that sliding parallel right there, okay? That also coincides just lower, somewhere in the range of like 127, I want to call it, 126.90. So some areas of interest. We'll see if it offers anything. I wouldn't, guys, be looking to mess with this anytime. I don't want to say anytime soon, but I want to say until we get some conviction on a little bit more of a turn in near-term price action. I'd like to see a rebound back through 127.97. Again, that's the 786, the post-Brexit swing lows, and that would take us above this median line for this multi-week channel formation we've been in. And that would be sort of the first indication for me is, okay, maybe we're in for a nice little rally, at least towards channel resistance, at least towards the former low day close, 29.26. And then again, you'd need to see a reaction up here to get the validation for reversal. So I'll be looking for signals of exhaustion, maybe a washout into the U.S. trade session, another dip back towards 26.90, like I said, 27. Maybe an offer of some nice divergence, a long trigger and momentum, something. But until we see that rebound snap back through 28, guys, I really wouldn't touch this on the long side just yet. All right. Mike, UK news commentators all taking sterling down towards dollar parity today. UK stocks, FTSE index at record highs. I have lifetime of savings in that. My wife wants to know if we should sell. So Graham, I don't really want to give you long-term retirement or like investment advice like that. I'm more, of a trader. I don't want to take a long-term stance on that. I can tell you if your time horizon is, and this is just from an economics major, from looking at things historically, Graham, if your time horizon is still way out there, man, I really wouldn't worry about it. Any time in period, guys, if you have taken, any type of valued asset and taken a buy and hold approach for the most part on a longer term duration, specifically in equities, you'd be all right. It's trying to trade it is what we're trying to do. So I don't really know, Graham, what your situation is or how long your time horizon is on that. But what I can tell you is this. People calling for parity doesn't matter to me. I really could care less. Graham, remember the sovereign debt scare that we had in Europe? Everyone was calling parity on euro. Everyone thought euro was going to go, sub dollar. And, these types of headlines, if anything, sometimes can be extremes in sentiment and tell you when you want to not sort of go along with that view. Now, I know that we got some headlines out of the UK saying that we could trigger Article 50 pretty soon. Then you got the Europeans coming out and saying, well, if you trigger Article 50, let's do that first, and then we'll go ahead and go to the negotiation table. So, yeah, these headlines are going to cause these types of moves. No one's saying that the pound is going to rally back towards 2 yet, right? But I just don't want to keep favoring this pound weakness as everyone's calling for parity, as we're getting these Article 50 headlines. These types of things, I think, tend to stretch the market and skew the fundamentals. So again, I'm looking for near-term exhaustion. That's all I can tell you from a trading standpoint. Near-term, I'm looking for near-term exhaustion. Graham, let me know if you have a specific question or if you want to give me a little bit more information on that. Again, if your time horizon is long-term, I really wouldn't worry about near-term corrections in equity markets. Same thing here in the U.S., guys. I agree, sterling dollar 5-minute divergence right now. I don't even have my platform open. So give me just one moment. So you're getting divergence even on this time frame right here, Graham. Again, let me bring it into a line chart. Price action just on these two peaks. These are actually my favorite divergence signals. The only thing is that it's in sub 30 territory, so those typically aren't strong signals to begin with, but it is divergence nonetheless. Lower low in price, higher low in the oscillator. These are the type of divergence signals I like to work with. Now, if that also manifests itself on a near term, here's what the 5-minute chart looks like. Now you're getting even stronger divergence here. So higher low on a closed basis, lower low, lower low. Yeah, that was a good scalp right there actually for the entry. 3-point trigger, and there's your divergence. Decent. Just watch again. We're heading into the U.S. Open. We'll want to see how this starts to pan out. You know where the key resistance range that we need to clear, okay? Initial topside 127.97, essentially 128, and that's also the median line, okay? So just keep that in mind. If we get through this, you'll likely see a little bit more of a snap towards channel resistance. We've been getting those pretty nice rebounds once we clear that median line towards channel resistance. So that would be the first initial play here for the pound. Also take a look at this resistance trigger here on the hourly chart. All right. Euro dollar doing the same thing right now, says Eileen. Here's the 5-minute chart for euro. Yep, same deal. I think the divergence signal on the sterling was a little bit strong because you had a 3-point divergence, Eileen, where here that last low was actually a higher low in price as well. So if anything, the divergence signal was here, and that signal gave out early in European trade. So I wouldn't say it's quite as strong because you're right back at 70 in momentum, but you are seeing definitely some signs of near-term exhaustion, yeah. If we clear the European highs, that would be a near-term reversal signal in and of itself. So we'll come back to the euro in just a moment. Any other questions on either of the updates from last night, Aussie or sterling? Previous night's update looked like this. We went over a little bit more as we were looking for the pound, or as we were looking for the euro, the Kiwi, the yen, specifically the dollar index. We talked about the consolidation range, which looks like it broke and is testing near-term resistance. We'll definitely take a look at euro pound as well. Just let me get through these for D. So we went over DXY. That's 1, 2, 3. Sterling was 4. Euro is 5. Okay, here's what euro looks like. And here's what we look like to start off the week. So this consolidation formation on the daily chart, huge, critical. And we opened up saying, look, we're basically just below near-term resistance here to open up the week. The breakout zone is 1255, 1256. That's basically the high day close for last month, and also converged on basic trendline resistance here on the daily chart. So that was really the level to beat to open up the month right here, your monthly open just below to get the upside target. Key support is being tested right now, and that's this pullback right here into last month's open, the 200-day moving average, and slope support, all converging right here. So today's close will be paramount. The only thing that would really sort of invalidate or shift things for us if we close below 1139. That's a basic 38.2 retracement, but that would also be the lowest close that we've seen since the break higher that we made last August, and would certainly necessitate a push through this median line. So near term, still same deal. You know, euro dollar coming in some near-term support, as we noted early in the week. That's what we were looking for to try to get back on the long side of the trade. Here's what we look like at the open of the week. Just below near-term resistance. Okay, look for interim support at 112.13. Our bullish invalidation levels raised to 111.83. Nothing has changed from those levels. So this is the level we need to sort of get back above again to get back on the long side of the trade. We'll see if we can't get that rebound early. All right, so same game plan. From a trading standpoint, to be looking to fade weakness early in the week towards structural support. We're there now. Okay, we're still below that 1182 level, but this is Friday's low from last week. So if you get that snap higher, you look for a pullback into that level to buy again. Or if the U.S. opening range break gives us a move higher along against the lows here, might also be a decent play, trying to play the rebound. Okay, keep in mind dollar index coming in some resistance. So if that holds, euro would be one of the ones I would be looking at sort of to fade that dollar strength. Any questions on the euro? So D, now would be a good time, I guess, to jump into Euro Pound since we're talking about Euro. That'll be number 6. Here's what Euro Pound looks like. I haven't looked at it yet this week, so just give me a moment. Oh dear. Oh dear, you're flirting with some stuff here for lack of better word, for lack of better terminology. Look, there's a lot here. I really don't know what to do with this. D, I have a bias, but remember, having a bias and knowing the proper direction the market's trading in, guys, is only 50% of the game. It's about having a setup to trade off of. At the end of the day, if we close above 87.40, I think this thing could explode. You're checking some pretty radical levels right now. Let me just kind of back this up real quick. So the slopes we've been following here, the origin of slope came from just the highs that we made in 2009 and subsequently later that year. Same slope carried off the high from 2011. Really nice touch. Break, zoom, retest. Same slope extended off the major highs that we made in 2008. Looks like we tested that last month, came off, and it looks like now that should be support. Okay, right there. What you're looking at as far as Fibonacci resistance here is a basic 618 retracement from that all-time or multi-year high at 2008 and a basic 100% extension of the advance from the 2015 low. Boom, boom, boom. And that caught the highs last month. So look, D, if we close north of 87.40, I would be looking for a stretch up into 88.15. Remember, these are pound pips, so they tend up being a little bit larger. The reason I personally don't like trading pound is because the ATR is typically tighter and the pip value is greater. So you're getting a tighter range. You don't really have much room to put your stops. And at the same time, those, if those stops get triggered, it's going to hurt more because they're in pound pips. So I don't really have a setup for you. I would say that as long as you stay above this confluence support or this confluence region right here of median lines around 86.70, that you'd want to be very mindful of trying to get short. And at the same respect, near-term targets on the 8 side would be 88.15. But I don't know if I would have necessarily an intraday play for you on this. Does that make sense? Says yes, thank you. Yeah, I mean, it's constructive. It's definitely constructive. The question is, if you're not in a position already, how do you get in a position from here? And I would be looking for some sort of pullback or at least a rally through that key resistance for the pullback and then to take it again along as close as you can off 87. But as it stands, you're flirting with a big break here. Big break. Momentum right at 70, right? So I wouldn't be too surprised if you start to see a little bit of a pullback off that region. All right, so D says, yes, thanks, you're more than welcome on that, D. Number 7, here's the juicy stuff, okay? So here are the only things that I've messed with this week. As a disclaimer, I don't have any open positions right now. I had a couple of shorts on earlier for Kiwi, and here's what Kiwi looks like right now. Look, the major level and the major pivot we've been talking about, I guess I'll bring it up on the daily chart first, is still going to be this 72.91, 72.96 region. All the way back to 2015, it was the low day close for the March calendar month. It was the former high day close that we made back here in July, and I know we've broken it multiple times, but that level has continued to offer some really nice trades, specifically on a pivot, on a sort of straddle. So if you bring this to a line chart, you can see really nice sort of pivots right along that key region. It now coincides with slope resistance. Here's what it looks like on the hourly chart. Okay, so the levels remain unchanged. Here's what Kiwi looked like earlier in the week. Okay, we opened up the week on Sunday saying, look, it's at resistance right now. Okay, so a move down, your initial target would be like last month's open. We traded just above it, literally a couple of pips. The open was 72.48, the low was 72.54 or so, and then it rallied right back into the opening range the open for the week. You saw another pullback here yesterday. It rallied right back in overnight trade, right back into the July high day close, failed to close even an hourly candle above that. But now look at the pullback. It's starting to find support at former channel resistance. So this could be the zoom and retest. And for me, heading into the U.S. Open, puts the focus on 72.70 into 73. A nice 30 pip range here. And that's what I'm focused on heading into the U.S. Open. Specifically, if the dollar starts to pull back from near-term resistance on a topside breach here, you'd be looking for last week's high as the initial target. As we noted on Sunday, we do like Kiwi lower. So the preferred level, the preferred reaction here would be a break back below the monthly open. And again, we'd be looking to sell rallies towards 71.17. Could be a little bit of a false break scenario here. We'll have to see. It's all guided by the dollar, really, at this point. And you're pretty quiet on Kiwi data, so it's going to be ADP tomorrow. Remember also, it's not only the start of the quarter, the month, and the week, but you also have ADP information or ADP data, jobs data on tap tomorrow, and then the highly anticipated non-farm payrolls, try saying that 3 times fast, on Friday. Eileen's also correct, 100%. We do have milk auction later today as well, and dairy auction stuff, so keep that all in mind for the Kiwi dollar. Okay, still liking the short side. Still liking the short side. Well, no, look, the setup from Friday is unchanged. And every time we get close to 72.95, I've been trying to catch a short. I didn't catch this last short here, but basically the game plan is every time we try to get into this, especially if the market quickly pulls back, I just take a stop right against the high and try to play the short side. And it's been fruitful so far. But now the focus into the open, like I said, with the session opens right now, the European low is right here. European high is just below resistance. Look for a break of this 30 pip range. Any questions on Kiwi? Okay, dollar yen. Here's what the last update looks like, and then we'll jump into your questions, Wes and Conwall. Here's what dollar yen looked like on Friday. All right, so we highlighted this structure saying, look, it's a little bit too early to really rely heavily on it, but it keeps the focus higher nonetheless, while above basically where we opened up the week and the month, right above slope support. Here's what dollar yen looks like right now. Okay, it's continued to react really, really well. Here's the update again. So we took out the top 2 targets. Again, Kiwi and dollar yen are the only 2 I've played. In fact, I do want to take a quick look at sterling yen after this yen cross, just because another pair that if the pound is looking to try to bottom here, and we don't necessarily want to play it flat out versus the dollar, now that we're seeing some yen weakness start to materialize, it might be something that could turn it. But for the dollar yen, for the abomination, who was asking about this earlier? I think it was Conwall. Michael, your bias for the abomination is perfect. Now it's above 102.22. So I appreciate that. You're correct. It took out 102.22, and now your next major key target is up here, 102.78. That's not only the high that you made here on that swing. I guess this was right ahead of FOMC or on FOMC last week or last month, but it's also a very nice pivot in price. Okay, so you can see the lows here, the highs here from back in August. So this whole region could offer some near-term resistance, and you could see a pullback, specifically if the dollar index pulls back too, would kind of sort of fit the bill, right? At that point, you would look for support right back at 101.75, last week's high, slope support, right? Longer-term former slope support as well, and that's sort of a key region for me. I'd be looking for possible exposure on the long side again. Ahead of that, one other thing is this median line, the longer-term one. Remember the one on the daily chart? May also offer some support on a pullback initially. It's a little bit higher near 102.20. But that's sort of the game plan for dollar yen. Look for a little bit of a blow-off high here near term. wait for the pullback and try to get back long on the pair. But this is one we've been following for quite some time. So for those of you who've been with us for a while, dollar yen, we've liked the long side. If you click on the update from the 25th, you know that was when we just highlighted, look, this thing came off of major key support as expected. Look for a break above 101.36 to get this going. If you go back even further, back to the 21st, as we came into that key support, we started to get bullish way back here on the 21st. Major area of support, look for a little bit of a turn in momentum, and in fact, you know, we sat down there for a while before a near-term slope break really set this thing off and gave us the upside validation. Okay, so unchanged as far as the game plan moving forward here for dollar yen. Still like the long side of the trade. See if we can't get that 102.79 clip. Where are you looking for a pullback to get long on dollar yen? Okay, you answered it. Thanks. Hey, you're more than welcome, Eileen. Cheers. All right, so that's all I have to cover. I want to jump into your questions. Conwall wanted to take a look at silver. Wes wants to take a look at gold. Euro key, did someone say anything about Euro key earlier? Oh, D, that was you? Okay, no problem. D wants Euro key, and D will get Euro key. Okay, so let's go in order. Conwall, here's what silver looks like. Commodities. Okay. Well, looks like we're making that triangle break to the downside. You said you're short from 1911, right? Nice entry. Real nice entry. Okay. What's this level here that I have highlighted? Ah, okay. So yeah, okay, so this is the daily chart. I'm sure you already know that, but this is the high that you're testing from 2015, specifically the January opening range high for the year. You can see that we found support here last month, or this is August actually, and into the February open, which are challenging right now. So could see a little bit of a rebound off this region. Nice support break here in momentum. That was something we were watching last week. Conwall, give me 2 seconds, okay? Let me just clean this up for you. We'll see if we can't get some clarity out of this. Ooh, the 618 is right there as well. Keep that in mind. You're at support. Near term. The 100 comes in right here, in line with the 50% retracement. Yep. Okay, so the 50% retracement confluence with the 100 off the high is exactly right here at 1740. Ahead of that, just a basic 618 off the advance gives you another near-term target along with the swing highs here at 1786. So this is what I would say, Conwall, as far as silver is concerned. Actually, I do want to leave that swing low there, is that 38.2. So these are your near-term targets, okay? Let me sort of highlight this for you. I'd be mindful of this whole region, okay? 1827 to 1843, the whole thing's important. You got 100% extension off the high. If this is just correctionary, that would be where you'd want to see this hold. Followed by the 38.2, which, like I said, turns out to be a nice swing low from way back here in 2013. That being said, if it breaks lower, you're looking for 1786 and major key support into 1740. This is paramount, absolutely critical, specifically if that 200-day moving average reaches into there, which it looks like it will in the next couple of days. Near-term resistance at this point, I'd be looking at the monthly open, the swing lows from back here. Whoops. Okay. So that would give you something like this. Take a picture of that, okay, and I'll jump into the hourly chart in just a moment. Kamwal, did you get that? So that's sort of the major daily chart I'll be working at. By the way, anyone here new to the room, you can take a snapshot of any of the charts that we're working on here by clicking on that camera button in the top right-hand corner of your screen. So if you need to refer to these charts throughout the trading day, definitely feel free to do so. Kamwal says, actually, this was your bias for the short. Yes, sir. All right, cheers, Kamwal. Yeah, well, it looked like it was a decent, consolidation formation. You saw momentum hold 60 multiple times. So yeah, last week we did say, look for that downside break. But near term, reworking the levels, now that we've made a break, look for this near-term support. Could be a rebound, but I still like it lower below the August, or below that swing low that you made in August there, July. It's not the August low date close. Okay, and let me just show you what the hourly chart looks like. See if there's anything interesting here. Okay, that's good. We took out that low, that retracement's null. Okay, so you could work with something like that, and basically what that does is it highlights that slope that we were working with. Remember last week we threw that slope on? I said, look, this is, typically commodities, I like to play these, let me take that back. Currencies, higher risk-related assets tend to play these pivots really well. So basic trendline resistance, we broke it, we offered support, we broke it, now resistance. That slope actually is better represented by the pitchfork we just added. Nice resistance, nice support, nice resistance. Okay, and you can catch also, or you can also note that the 50 line, the basic median line that divides this top quadrant into two, caught the highs here and caught the lows here. Caught the highs again here, the median line. And let's just add those levels we did right here. There's that 100% or 618 extension. There's a 38.2. There you go. Near-term resistance, woof, right at the monthly open, weekly open, and that would take you due east directly right into channel resistance here near 1914, 1915. Next downside target, I'd be looking here. But that 38.2, this whole range, just be careful, Conwall. If we dip into this whole range, this is really the range you need to beat to get the open up the downside. Okay, so don't be too surprised if you have a short on play. Maybe a good region to take a little off, bring your stops to break even. But for sure, this is a big range. You need to clear this out really to open up the downside bias here. And let me get rid of this. Don't need that at this point. All right. Hope that helps, Conwall. Let me know if you have any specific questions here on silver. You've been tearing up these commodities lately. Good job. Well done. So that is number 10. Number 11, or let's go over gold for Wes. Hey, you're more than welcome, Conwall. Oil. Okay, we'll hit that right after gold. Wes, this is for you, man. Here's what gold looks like. So I just published the quarterly projections for gold on Daily FX, and it's interesting because we already broke the major key level that we needed to hold, and that was 1303. So things change for gold here, in my humble opinion, if the next couple of days don't prompt some kind of reaction off of this key region here. Absolutely paramount. So I'll take to the longer term projection in just a moment, but just to put things in perspective, we're still within the confines of this descending median line formation. It could be a bear channel, could be a lot of different things manifesting itself, but the 50% retracement of the advance off the lows that we made from May gives you 1287. Slope support comes in just below that. Momentum now breaking 40 for the first time since back here, okay, and that was in May. That inevitably led to that major key low. So it might be in for a spill. I don't know. The only thing I do know is that I'm looking for near-term support lower from here at 1285, 1287 region, where you see us highlighting this sort of key area of support. I think the broader trade is higher, longer term. I think near term, if you break this low, or you break this key area of support, you do risk a much more significant drop before this thing starts to mount an upside play again. So look for initial support at 1287, 1285, this key region right here. Wes, did you have any specific questions on gold? Could be an interesting slope. Not a big fan. He says, so do you, I think you mean think, it's safe to short at 1300. I hate using sentences like that because nothing in trading is safe, Wes. Look, around 1300, 1312 is where I'd start to look for resistance. I don't necessarily say I would want to be short from there, but that is where I'd start to look for initial resistance on a move lower. The former swing lows, yes, the 100% extension, that'd be the first area of resistance you'd look for, sure. Yeah, 1303, 1302, more specifically, sort of this region right here. Looking for inevitable stretch back into 1287, 1285, yeah. He says, thanks, I'm looking to buy at 1280. That's the trade for me, Wes, that would be a little bit more appealing. You know what I mean? Instead of trying to sell this and chase it to a fresh 3-month low, I'd be looking for this decline to sort of find some support lower down. Yeah, I'm with you on that one. Same thing with the dollar. Instead of chasing the dollar here into resistance, I'd be looking for signs of exhaustion. Just my humble opinion. Wesley says, okay, thanks. Looking for U.S. dollar weakness to push gold higher later. Yeah, that could be the play, and that's why I'm cautious on encouraging any short exposure here. And same thing with the dollar index, right? Because that's sort of at resistance. This is eyeing down key near-term support just lower. So I would like a scenario where this dips into key support, rebounds, dollar index tries to probe through resistance, fails, and that sort of would fit together from a nice puzzle piece, right? So Wes, hope that helps. I do like that sort of outlook moving forward. Yeah, you're more than welcome, Wes. I appreciate that. Eileen says, any specific impacts to access your Daily FX notes on the change of ownership of the sites? So as you guys probably heard on Friday, the press release went out that Daily FX was indeed being sold to IG. We're really excited about that. As far as any specific impacts to our Daily FX research, you shouldn't really see any, guys. The transition is really just that of ownership as far as the analysts that you'll see on Daily FX, the research that's done. You shouldn't really see too big an impact at all. So just a quick note on that. Conwell says, Michael, your technical analysis, almost 85% are correct. See sterling yen, it's holding 130.30. I'm not really tracking a percentage rate, Conwell, but I appreciate that nonetheless. We went over oil. No, we didn't. So let me cover oil real quick first. That was gold. Oil is number 12. Here's what crude looks like. We are blasting through. The same type of bias sort of invalidation that's been flirting on the metals is now definitely playing itself out in crude here as well. This is big for me. And as I said last week, 49, 48.97 is the last ditch effort. If this breaks, you're looking essentially for a rally towards the high day close for the year. Okay, that's 50.41. And then the high, the actual stretch high, takes in 51.64. And then a basic 786 retracement. Let's choke that up. Okay, you're at resistance. You're at resistance any way you look at it. Momentum is tagging the highs that you made back in August at 786 retracement. Like I said, is a little bit higher. And basically, this is what I need to see give out to validate a break of this multi-year formation. Okay, in fact, if we take this, if I'm not wrong, and extrapolate it here, this is actually what caught the exact highs perfectly. So that same slope has been such a major key influence in this crude trade for years. If this clears 48.97 on a closed basis, sayonara. Look for 50.41, 51.60, 54.20, 129 on a stretch. But near term, this is resistance, plain and simple. Plain and simple. I'm not gonna be a stickler on this range here again above slope support or slope resistance, just on account of severe dollar weakness that you're seeing that pops it higher, and the broader commodity move that you're seeing, right? Really seeing oil moving higher here, kind of bucking the trend. So I'd be cautious. 49 is resistance. Hey, Mike, how many trades, excuse me, do you take each week/month? Hey, Matt. It's really variable. I don't set a goal for myself, and at the same time, I don't limit myself. So, Matt, there are some weeks, I can tell you last week, just off the top of my head, I was well north of 20 trades. And now it depends how you quantify that as well, because, Matt, a lot of the trades are an entry, and then I chip away a little bit here, a little bit here, a little bit here, a little bit here. I count that all as one trade. TradingView or Trading Station will count that as separate trades. But I would say, well north of that last week. Didn't trade anything on Thursday or Friday. That was all just Sunday through through Wednesday night. The previous week, somewhere in that range as well. This week, I haven't traded anything yet. Completely flat. I had a couple of moves on the Kiwi, but even those were like really, really small positions. So I tend to be very nimble, Matt, early in the month, early in the quarter, and specifically late in the month, late in the quarter. These type of transitions can oftentimes, really mess with intraday price action. So I don't really tend to put too much emphasis on this time period. That said, my goal, or I like to, somewhere in the range of 5 to 10 per week is what I would say is average, Matt. But it's completely based on what the market gives us, If there's clarity, Matt, it could be 40, 50 trades. If things are a bit murky, there's a lot of event risk on tap, it could be 1 or 2 trades for the week. I completely let the market dictate that. Make sense? Do you set goals for number of pips gains during the time period per week? Eileen, no. We have a set profit target that we're looking per trade, absolutely. So when we're looking to get into a trade, absolutely we have a profit target and we have our stop. But do I say this week I want to make 60 pips? Absolutely not. What happens, guys, is you fall into this pit of trading the account instead of trading the market. That's something you never want to do. What do I mean by trading the account? Trading the account is essentially I want to make X amount of return. I'm looking at my P&L as I'm in the position. So instead of looking at what the market's doing, I'm watching P&L. These types of expectations, these types of behaviors, essentially to someone going down the route of you're trading the account. I want to trade the market, right? My account is irrespective. The market's going to do what it's going to do, and it's more important for me to pay attention to price action than it is for me to say, oh, I'm trying to make X amount of pips today or something like that. Does that make sense, guys? Hoping to get too sidetracked, but a good question. Matt says, gotcha, thanks. Eileen says, yeah, not been able to hold goals like that myself. Yeah, and the other thing is, you're heading towards Thursday. You have a 30 pip goal for the day or whatever. Now you find yourself, looking for positions to take just for the sake of taking them. That's the worst thing. That's the worst reason to place a trade. The only reason I'm going to take a trade is because the technical clarity is there. I have a clear-cut profit. I have a clear-cut stop. I have a clear-cut entry. That's it. That's the only thing that matters. Okay? It says makes sense for sure. Cheers on that. All right. Last but not least, for D, want to take a look at Euro Kiwi as well. Haven't seen that yet this week. So let's do that. D, Euro Kiwi. Okay, interesting. So 54.77 continued to hold into the close of last month. Remember, we highlighted that region as a basic median line. You also had a basic 236 near term. It was also a 618 extension from the advance. So you had a whole cluster of stuff up there. Looks like you're getting a near-term momentum trigger break. Okay, I'm just going to leave that 618 since it caught the highs for now. But I do want to see what this extension looks like. Not the most fruitful. I'll leave it on here just for now. Yeah, I don't want to stress this slope too much, but look, major key support I have on this pair would be right down here near term. Okay, that's a 50% retracement of the advance, the exact 100% extension off the decline, so 2 equal legs lower. I would actually really be interested in a long position off that region. Who asked about this? Oh, this is for D, right? D, I'd actually be interested in a long position if we get down there for the Euro key. Lots of slope. That's basically this right here. Major key resistance and the level to beat still is 54.76, okay? That's going to be the breakout zone. So we'll continue to track this, but I think you look a little bit lower, and I think you look to buy that dip if you get that move towards just below 53 handle. D says, I can't see anything to do here. Well, that's sort of the only thing I'd be interested in doing. From this level, no, I don't have anything. I wouldn't be looking to short this. You're already at multi-week lows. Not multi-week lows, but a 2-week low. And I have support just lower. So if you get a drop, a washout towards 53, I would be looking for a possible long entry. All right. Conwall says pound yen. Yes, we are out on time, but let me just take a quick look at pound yen. I completely forgot about it. That was 13. Pound yen is 14. Here's what pound yen looks like on the daily chart. Look, similar thing to what you're looking at with the dollar, with the pound dollar, except this didn't dip into a new fresh monthly low, which has me again thinking this could be the one to trade if you're looking to play some of that strength in the pound. The region we would need to beat near term unchanged. Still need to get above. Actually, I wouldn't even stress that. I would just stress the basically weekly opening range high. Sort of this region right here is the first region that we need to get through to get the upside. Looking for 131.80, looking for 132.28, and this would be the breakout zone. Okay, you look for the Brexit swing lows, that 100% extension that takes you to 33.20, 33.30. But last ditch effort. I mean, same thing here. If it breaks below 129.92, sayonara. All right. So I do like the notion of pound yen strength. I just don't think we have the conviction to do it neither in price action or near-term momentum just yet, Conwell. We'll come back to this tomorrow. I think you get a little bit more clarity as you get through sort of this opening for the quarter. All right, guys, we're going to wrap it out here. I'm sorry again if I was a little off kilter today. I am fighting a horrible chest cold, so a little bit dazed and confused, but it's good to be with you guys nonetheless. I will be back on board tomorrow morning. Also tomorrow, don't forget, 1 p.m. Eastern is Jamie's midweek strategy webinar. Hopefully we'll get a nice review of what's going on, a little bit more on the medium-term, longer-term approach on some of these updates. Again, keep in mind we're just opening the quarter in the week, so you're likely to see a little bit more back on fill on any of these trades that have stretched out real early in the week. And obviously we have major U.S. event risk. Tomorrow's ADP, and then the non-farm payroll print obviously is on Friday. Take care, recover soon, says Wes. Thanks, and feel better soon, Eileen. D, thank you to you as well. Conwall, guys, I'll see you all tomorrow morning. Best of luck trading. Cheers.